I welcome you to another episode of our one-on-one mentorship with Hammer Loaded. In today's video, I'm going to explain how to trade bearish structure. Remember, in our last episode, I explained that whenever the price action formed bearish structure by creating lower low, lower high, lower low, lower high, it's a sign that the sellers are the one dominating the market. And as a professional price action trader, what you are supposed to do is to trade along with the rulers of the market. Now, and you can see the pattern of bearish market structure, whereby we are having a pattern like this: lower low, right? Then lower high. This is serving as our lower low, lower high. Then price form a new lower low. Remember, this particular zone here was serving as support here, right? Remember, I explained that support is just like a price floor, a zone stopping the price action from falling down. The moment that the price action invalidates a support zone, it is no longer a support anymore. It has turned towards resistance. But the moment the price invalidates this support zone, you don't call it support anymore. It's now turned towards resistance. You have to wait for price to give you a pullback here so that you can take sell opportunity. This zone is now lower high. Remember, we have another lower high here. We have lower low around this place. We have lower low here. Then we have a new lower low here. This place is now our new lower low. Price was forming high, lower low here. Price bought to form a lower high, sold lower low, lower high, lower low, lower high. What you have to do is to establish the key level zone. While the price is retesting the key level, that's when you should position yourself to sell. I'm going to show you how you are going to execute that. And if you look at the historical data, if you extend this rectangle tool to the historical data, you can see that this was serving as support that pushed the price to the upper side here. Then the price came back again. Price broke this support here, now turned to resistance. So you have to wait for price to give you a pullback here to sell. Let me show you another example of bearish market structure on British Pound USD. You can see that this current market was giving us lower low, lower high, lower low, lower high, lower low, lower high. This is a very clear bearish market structure. To trade a bearish market structure, you can see that this space was serving as support before. If you establish its support, until the price action broke it to the downside, price came back in the future to come and retest it here. Price sold massively. To trade another one, you can see that this was serving as support here. The moment the price action broke the key level here, turned it to resistance, you wait for price to retest it, then you execute. You take a sell opportunity. In our next video, I'm going to show you how to do a proper top-down market analysis and how to execute the resistance zone where you want to take a sell opportunity.